I will use 20 KPIs, views, and insights and comparisons that will provide some deeper dive in asset class. And this will be global data, including US, UK, Europe, Australia. So, and as fresh as possible. So where is the data coming from? So we are an independent research provider based in Vienna, focused on student housing, micro-living, co-living, and other rented resi asset classes. We have 4 offices, 50 people, done now over 300 projects. We monitor 5,000 purpose-built student accommodation buildings, 600 of them coming to the market, and 700 companies that are active in this asset class. We are a member of United Nations and SMR, so our data is independent, reliable, and global, hence comparable and consistent. Student housing. So out of 23 asset classes, and 19 of them alternative asset classes, student housing is number 1 in terms of volume, number 4 in terms of investment and development. It's a relevant asset class, mature, transparent, sizable, but still offers benefits of an alternative asset class. In terms of trends, it all started in the United States, followed with the UK, and then came to the continental Europe. As we can see, after these are transactions, after first stronger 4 years, we have following strong 4 years of double of the transaction volume in particular markets, be it the US or UK, and now we expect the same in continental Europe. So from the initial 4 years in 15, 18, and about 2 billion transactions, we expect this to go to 4 billion in next 4 years per annum. Only the brands you can see featured on the bottom of the slide cumulatively represents 5 billion to be deployed in next 2.5 years. In total, in continental Europe, we expect 10.6 billion to be deployed in new projects only for the territory. So there is a lot of capital in the asset class, not so many opportunities, and we will talk about that later. It's difficult to find the right product for the wall of money that is coming. Why is it so on demand, this asset class? Basically because demand is strong, consistent, and growing across the economic downturn period of mankind. So it's a so-called counter-cyclical asset class. It's delivering in economically difficult times. Moreover, the destinations strategically stimulate growth of international students who are the main tenants of purpose-built student accommodation. So from an asset class that was an underdog, a niche, is now becoming an attractive, liquid, transparent, alternative asset class with a lot of appetite, confidence, capital, still yielding high. So the yields are not so compressed. So it's sort of a very historically sweet spot for the asset class. So demand and its structure. These are selected 100 cities broken down to number of students, and then we will see international students. And we have 4 categories of demand. So the dark ones are, we call them supersized cities with 200,000 students and more. Follow with 20 big tier 1 cities with 100 to 200,000 students. These cities are usually targeted by players who need to deploy a lot of capital or with acquisition ambitions, so targeted for volume. And then we have majority of mid-sized cities with 50 to 100,000 students, which are usually, these cities are part of the most strategies in this asset class. Followed with the last part, 25 niche cities, which we call like tier 1 cities, tier 2 cities for population, but tier 1 for student population, so still it delivers quite good demand levels for student housing product. These cities are part of selective strategies that are focused on returns rather than volume. This is a number of international students. International students are the main target for private product in continental Europe. They are the main tenants. We can see 7 super-sized cities with 30,000 and more international students, 19 big cities, 15 to 30,000, and majority 61 mid-sized cities with 5 to 15,000 international students. There is still sufficient demand for private PBSA stock. Growth rates, they are phenomenal. So in states, 63% over the last 10 years. However, the growth is no longer there for international students. And actually, there is a decline in number of international students now entering states as first class. Then UK, it's increasing. It was increasing under the angle of 27%. We expect it will increase at a more rapid pace now, as there is a new work rights regulation and cheap pound is attracting more international students to come. Western Europe will continue its pace. The countries like France, Spain, Italy, Germany, they have strategic plans, they have targets, they have budgets to stimulate influx of international students. International student is an asset that will convert to talent, that stays in the city, and lifetime taxpayer for all the stakeholders in the city later on. CEE is the fastest growing region in terms of international students, and Australia is at 47% at the 800,000 enrollments and 700,000 international students now. And we expect this to grow at the same, if not higher pace, as the government has a strategic goal to replace some of the other export asset classes like mining with education. So the number may go up until 1 million by 2025. So, number of private PBSA beds. To see the caliber, so in the UK we have 255,000 in those top selected cities that we chosen for you. Whereas in continental Europe we have 150,000 private beds plus 40,000 in Australia, which gives you a proportionally where is the business now. So it's predominantly UK, followed by continental Europe and Australia. In terms of saturation or provision rates, UK is about 25% of number of beds to number of students, whereas in continental Europe it's only 13%. So Europe is only halfway through to catch up with the UK market. However, when we look at the private provision, so number of beds in private stock compared to international students, it's in some cities in the UK 50%, but in most cities in Europe about 5%. So the bed to student ratio in private stock is 1 to 2 in UK, but 1 to 20 in Europe. In other words, it's a lot of room for new stock. And if Europe has same provision as UK, it would need 1.1 million new beds to be built. So there is a lot of room to growth. However, we will get there later, the product is important, not only the numbers, the suitable product. Rental levels. So the average rent levels across Europe is 150 euro per week or 600 euro per month in a private PBSA. In some tier 1 cities or better positioned cities, this is about 800, where the demand is high or the private stock is really low. The rental level growth is about inflation. In some cities it's double digit, like Dublin or Porto. The growth is constant, but it's moderate, let's say, in average. Pipeline, probably the most important slide out of 20, which gives us the second half of our slideshow. So this tells us the story of a future. So what's coming to the market? So there are 592 projects that have either are under construction or already have a permit to be a student housing. It represents 151,000 beds coming to the market in private stock. At the average market value per bed, we're talking about 17 billion investments coming to the market. Average size of the new property is 255 beds, a little bit less than it should be because the operational economy of scale is reached at a level of 300 plus. The main markets are UK, Netherlands, Germany, Iberia, Italy, with CEE and France shaping their muscles, if I can say so. There are now 700 companies actively engaged and involved in student housing asset class worldwide. It increases by almost 200 companies in the last 2 years. And out of the IPE ranking of top 400 asset class managers, already 144 of them are already involved in student housing. The most of them from the top 100, 80%. So the market leaders are already in student housing. The stock, the product, differs by the region. So as I mentioned, in the United States, it's usually on campus, attached to one university, very modern stock, rich amenities, because land is cheaper than the one you buy in the UK or Europe. In the UK, many of the beds are allocated through the nomination agreement, so still quite related to the university, and that influence is quite strong. We have established portfolios, very sort of calibrated product over there, and location and proximity to university is a key in the UK. In continental Europe, it's all directly let, not so much nomination agreement seen, so it's off campus. It needs to be outstanding location with the proximity to city center, proximity to universities. So land and constructions are more expensive in Europe than in the UK. And the buildings needs to be very competitive, so state of the art, and they need to be amenity rich, so 10 plus amenities in the building. In Australia, these are institutionally money driven products, state of the art, hotel-like premises, very large scale buildings, upmarket facilities, and almost design houses, if we can say so. With the new product coming, especially in continental Europe, the product needs to be competitive, so besides the traditional amenities that we need to be in building, we now see some innovative steps. So we see bike sharing stations, car sharing stations, co-working areas, incubators, event managers, full-time event managers to create community within the building, residential mentors, rooftop terrace, pools, workshops organizing, job fairs. So the life and community is the number one reason for the target audience to stay there and pay premium over the private rental market or flats to stay. So that's why the operators focus so much on amenities and life. So if I said that numbers are great, demand is growing, more and more students are knocking on the doors, but it's not that whatever product will succeed. The occupancies are usually way above 90%, but some of the product might not be so occupied after more private stock comes to the market. So suitability of the product is a key to succeed. So the location, 300 plus rooms usually, and amenities and community. But this slide wants to show you that, for example, in Vienna, there are 126 PBSAs, but only 11 are public, and only 11 are private, and only 10 of them have more than 10 amenities, which we call the competitive stock. So it's because it's hard to find the plot or the building. It's long to convert in old cities downtown and get the off-market offer. So if you have any, please let us know, or the panel. These are the results of the primary surveys that we do over the students in cities across Europe, about 10,000 students per city. And we know, therefore, what students want. Each city differs, but there is some common denominator. All students want laundry room, study room, communal kitchen, gym, library, bar, lounge, game room. But there are some amenities that make the difference when it comes to the rental levels of your property. So if you have a garden, if you have a rooftop terrace or pool, or bike sharing station, that usually makes a difference and sort of allow you to charge premium. So, conclusions. It moved from US, still the most mature and most liquid market, followed by the UK. Now the hotspot and the most development is expected in continental Europe and Australia. Basically, now the focus is moving not only territorially from US to Europe and Australia, but also from the countries to cities, to street level, to buildings, and the transparency of the asset class is now done per each particular building, and how many beds are there, what are the rental levels per each type of a room, what amenities are there and included in price. So you can study this at home with this interactive map. Second to last slide. What's the status of the industry and what to expect? Well, it's a young and still unconsolidated asset class. We have 405,000 beds in private stock, which is equal 44 billion euros in private stock in this asset class in the UK and EU. Still the same, right? So existing stock 44 billion, available for transactions, acquisitions. However, of this stock, only 25% and 25 portfolios are bigger than 5,000 beds. So we have only 107 portfolios. 25 of them are bigger than 5,000 beds. So most of the portfolios are small, or there are no portfolios. So open for transactions, open for acquisitions and consolidation. On the other hand, on top of these 405,000 beds that are existing in private stock and subject to transactions, we have 151,000 beds coming, which is equal 17 billion, as I mentioned. And that's all the opportunity for not only new investment, but a lot of consolidation and profit margin adjustments. Last slides. We monitor 250 sources of information on every daily basis. What's going on? So there are roughly 10 changes on the market a day, be it it's a transaction, buyout, a new permit or refusal. So it's a lot of going on, but we did the analysis for you for this occasion. 65% of that is still happening in the UK and 35% in Europe. But we expect this to balance out in the next 4 years. If not, that the EU will be in front of the UK. And I will leave you with this, and hopefully this was enriching. So thank you very much.